trade FX through these banks, although some have created their own liquidity pools through the years. Many banks, e.g., small community banks or banks in emerging markets, corporations, and institutional investors do not have access to these rates because they have no established credit lines with big banks. This forces smaller participants to deal through just one bank for their foreign exchange needs, and oftentimes this means much less competitive rates for the participants further down the participant hierarchy. Those receiving the least competitive rates are customers of banks and physical currency exchange companies. Recently, technology has broken down the barriers that used to stand between the end users of foreign exchange services and the interbank market. The online trading revolution opened its doors to retail clientele by connecting market makers and market participants in an efficient, low-cost manner. In essence, online trading platforms serve as a gateway to the liquid FX market. Average traders can now trade alongside the biggest banks in the world, with virtually similar pricing and execution. What used to be a game dominated and controlled by the big boys is slowly becoming a level playing field where individuals can profit and take advantage of the same opportunities as big banks. FX is no longer an old boys club, which means opportunities abound for aspiring online currency traders. Dealing stations, interbank market for serious traders who want to know more about the interbank market. The majority of FX volume is actually transacted primarily through the interbank market. The leading banks of the world trade with each other electronically over two platforms, the EBS and Reuters, dealing 3000 spot matching. Both platforms offer trading in the major currency pairs. However, certain currency pairs are more liquid and generally more frequently traded over one versus the other. Some cross-currency pairs are traded over these platforms as well, but others are calculated from the rates of the major currency pairs and are then offset using the legs. For example, if an interbank trader had a client who wanted to go long NZD-CAD, the trader would most likely buy NZD-USD and USD-CAD separately. The trader would then multiply these rates and provide the client with the respective NZD-CAD rate, creating a synthetic quote-and trade. Of these three parameters, only the first is still in existence today, but the organizations formed as a direct result of Bretton Woods include the International Monetary Fund (IMF), World Bank, and General Agreement on Tariffs and Trade (GATT), and they all play a crucial role in modern-day development and regulation